Okay, folks, we're going to continue with our educational series. We'll start with the 2060 target date. 2060 target date, the funds that seek to maximize assets for retirement with an expected retirement date on or before 2060. So I can tell you offhand, since it's 40 years from now, the fund is going to be pretty aggressive starting off, and then it should start tapering down every few years and get conservative as it gets closer to 2060. So people who are just starting off in the workforce, more than likely their employers will put them into a 2060 target date fund. Let's get started. Let's get started by looking at the performance. So we're going to compare the performance of the 2060 target date with the Dow Jones 2060, the S&P 500. Let's see, 1 month, 3 month. You already see on the 3 month, the S&P 500 is beating them. On the year to date, S&P 500 is ahead, which it should be. 2060 target date for State Street, 14.76%. Dow Jones, 15.76%. S&P 500, 18%. S&P 500 should always lead because it is the global benchmark. Let's look at how these did for the past year. You see 2060 target date and Dow Jones 2060. They're only like 5 and 6%. That's because last year they ended negative. So that 1 year is a rolling 12-month time period. So they're starting to do good this year. Last year, almost every fund ended negative. If you look at the 3 year for 2060 target date, it's a newer fund. So you're not going to have data for the 3 year, 5 year, 7 year, 10 year. But let's look at the Dow Jones for the 2060. You see the S&P 500. S&P 500 is beating the Dow Jones, which it should be. The 5 year, you see 7 versus 11 for Dow Jones versus S&P 500. And the 10 year, 12 versus 15, which is to be expected. Since the fund's inception, you see the Dow Jones is beating the 2060 target date by about 1%. S&P 500 is beating 2060 target date by about 4%.